Hello and welcome to another update video about ADA. ADA continues to be in this overall correction. There's currently no evidence that the current, what I have labeled as a wave 4 pullback here, that this is over. Okay, so we have to remain patient. Why is there no evidence? Well, because it's very simple, because we haven't seen a 5-wave move to the upside yet. Okay, so it's only a corrective rally, and it's good that we have focused in the past so much on this, because when we don't get 5 waves up, typically the risk is very high that we see it break down again. We've seen it, for example, here. That was only a corrective rally as well. Whenever we have corrective rallies, it can easily break down again. Can easily break down, yeah. In this case, in an extended A, B, C structure. So let me first take you through the overall scenario and wave count here. The idea remains that a third wave topped here in a larger diagonal pattern here in December, that the fourth wave is unfolding right now. And if we take a look at this overall structure, then this fourth wave looks very complex. Yeah, looks very complex, looks somewhat incomplete. Doesn't mean it has to be incomplete, but I can tell you that without a first clear 5-wave move to the upside, I cannot really confirm a low in place. Obviously, we have a larger support area that's highlighted here in yellow on the chart. It's between 50 cents, which is, to be honest, very shallow for a wave 4, and 34.5 cents, which is very deep for a wave 4 in a diagonal. But I would say, you have the ideal range here somewhere. There are very clear levels where we actually have a little bit of an overlap between different support levels. So 43.9 cents is the next Fibonacci support, and then 40.8, and then even 39 cents. They are the next support levels. We are currently above support, so naturally I'm watching for higher prices. However, in the short term, it could be that we still go a little lower because we haven't seen a 5-wave move to the upside, but still holding support, right? So the idea is, as long as we're holding that yellow support box there, I focus generally on higher and continue to track an overall bullish scenario in which one more high to round about 85 cents should, or maybe even a little higher, should take the price obviously higher in this wave 5 and lead to completion of this diagonal pattern. Now let's take a look at the shorter time frame. Here you see the structures I'm tracking on the micro level. Let me take you through the short-term bullish and then the short-term bearish scenario. So in the short-term bullish scenario, that's the yellow count. I've labeled it in a way to visualize that, hey, we only have 3 waves up. I've got a wave 1, I've got a wave 2, I've got a wave 3, 4, maybe, very deep, but acceptable. So far reacted to the 50% Fibonacci level at 49.6 cents. We talked about that level yesterday, or that entire range here, between 48.7 and 51.7 cents. That's the support area that needs to hold to give us a 5th wave. Below 48.7 cents, probabilities for a 5th wave reduce significantly. We will not have invalidation, but it will just reduce in likelihood, okay? So I'm watching at the moment for the potential of a 5th wave to the upside, but the market has only given us 3. So until I see 5 waves, I cannot add a support area to the chart for the upcoming deeper pullback, because 5 waves up would give us again a potential wave 1. And then we look for the wave 2 pullback as a more or less reliable trade setup. At the moment, we're simply watching here. I don't see that as a reliable setup, absolutely not. There's just a wave 4 in a diagonal. You normally, I mean, sometimes they are good to trade. Sometimes wave 4 pullbacks can even be better than wave 2 pullbacks. But yeah, this is just a micro perspective here anyway. And the overall correction doesn't really look finished. Different on the rune chart, for example, where we have a fairly deep wave 4 pullback, and it's behaving well here. I mean, again, I can only give you the levels, right? So as long as it's holding one more high possible, should then minimally take us above the 53.7 cents, probably more into the region around 55. Now, until then, we have also to deal with this white structure, which gives us basically an ABC structure, or it could even be a WXY. I can even simply add a WX here, and then the Y wave is an ABC itself. doesn't make a difference. It's a 3-wave move. And if we get a sustained break below 48.6 cents, that's now the short-term bearish scenario, it will likely take us down even below the 23rd of January low, which was here at around 44.8 cents. These are the two main scenarios, short-term bullish and short-term bearish. We see a little bit of a reaction here to the support area, but it's not enough. So it's all about, okay, let's see if we can get 5 waves. If we get them, we can react to it and add a support area to the chart. Until we have 5, for me, the correction is still unfolding. Yeah, that's my update about ADA. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.